I found it interesting that Inman has taken a shining to cover the same things that I do in their market updates, talking about oil and inflation and mortgage rates and so forth. So, just wanted to review their article here that came out on Friday, and they're talking about oil prices are sky high. Well, guess what? There's a war going on in Iran. So, yes, that makes everything expensive. As we move on down through the story here, we see that CPI was up 3.8% year over year in April, and that's also due to the energy shock. Um, the producer price index was up 6% year over year. Eventually, that filters through to the consumer prices. So we can expect that trend to continue. And then the 10-year Treasury bond has been clicking higher behind the scenes with higher interest rates because the cost of borrowing money is going higher. The 10-year Treasury yield has surpassed 4.6%. Not really a surprise, which filters through to mortgage rates. We see from Mortgage News Daily as of May 19th, 6.75% for a 30-year fixed mortgage rate. Freddie Mac 6.36% on May 14th. Now, the next part of the story has to do with active listings, and this is on a national basis. And this is interesting. The growth of inventory has been decelerating, which would point to a stabilizing market with neither a glut of home listings building up nor a frenzy shortage condition. So that's interesting, but we're more interested on what's going on right here in Gainesville, Alachua County. So if I go into Sunstats here, and I should point out that the Gainesville MSA includes Gilchrist County, because as far as the state of Florida is concerned, we're all one big rural area. But this is just including single family homes, not townhomes, not mobile homes. The single family homes, all price tiers. And we could see that coming out of COVID, inventory was slowly building, slowly building. It looks like maybe we plateaued here. We have the normal fourth quarter low, and we're rebounding back a little bit. But active inventory and pending inventory all seem to also indicate that we are stabilizing here as well. Interesting time to sell for our MSA. It was below 60 days back here coming out of COVID. And we've been creeping up, seasonal influence, but over 100 days now. Last thing with the stats here, median sale price has been flat for a while, and we're actually down 2.7% year over year, 340,000 for Q1 2026. We've got some fun reports scheduled for the week. We've got core PCE on Thursday, durable goods, personal income, personal spending, and information on new home sales. Finally, interesting article from Zero Hedge Friday, World on Borrowed Time. A little bit gloomy and doomy type of reporting, but how America has over leveraged itself with super low interest rates during COVID and how our total debt is going to be our demise. And my favorite Popeye character, Wimpy, will gladly pay you Tuesday for a hamburger today. We have roughly $12 trillion in outstanding mortgage balances right now, coming out of the housing boom of early 2020 through 2022. Fueled by ultra low rates below 3%, turned millions of Americans into amateur real estate speculators overnight. Rates jumped to 7% plus, creating famous lock-in effect. We've got lots of homeowners that I talk to here locally that they have cheap mortgages and now they're financially glued to their houses because trying to move would mean replacing a bargain mortgage with monthly payments that are going to be ridiculous. So that's it for now. Let's hope that things start coming down as far as interest rates and we can have a more normal market here. If you want to talk about your situation, please call me 352-870-5700. Happy Memorial Day.